There we go. Hit record. Welcome, Ira, for Trading Unfiltered episode 72.
Thank you, and thank you.
All right. So the team was talking about China, delisting China stocks, all sorts of things this morning. So why don't you guys start off with some of your questions and then we'll get to it.
Hey, Ira, Pete, how you doing?
Oh, okay, Pete, how you doing? All right, I'll turn off my, you don't need to, oh, good, you turned off my video on too. I got a face for television.
Yeah, we were talking earlier about the Chinese stocks listed in the U.S. and it occurs to me that exchanges should list companies that have bona fide financial statements and also that the equity of the U.S. investors on the exchange is protected. So I wonder if you could comment about that and where would those share equities go if they kicked them off the U.S. exchange? And I don't know if you have an opinion on whether that loss of liquidity would result in a drop in those shares.
Well, let me, I have some regulatory experience, but from the CFTC, because I sat on a committee in Washington. But what allows the listing, and let's understand this. And I said it the other day. Well, it'll be published out tonight. But as I say, there are people who believe in, and rightfully so, herd immunity. But I always want to be immunized from the herd on Wall Street, because, like it or not, Wall Street, just chases dollars. And as I one time in a very heated discussion with some share underwriters, I made the comment to them because it was so obvious. Wall Street is all about chasing commissions. That's how they exist. Most people on Wall Street don't make a living trading. They make a living by commissions. So, getting stock listed, and IPOs, generates huge amounts of revenue. Because I always start with the question, how do so many people, and I know many of them, make such high-level earnings when their ability is really minimus? And I say that because I've talked to them and they've tried to sell me things at time, and I go, why should I imbibe in that? And that's because it's commission-driven in one way or another, commissions or fees. So they get a lot of fees from these. And you know what? As far as I'm concerned, the SEC really, in so many ways, has been watered down and minimized. Listen, nothing says it more than when they were discussing in March, banning short sale, that they couldn't even get themselves to put the uptick rule back in, which should have been first and foremost, and they should have put it in long ago. Why they ever took it out, I don't get conspiratorial. I just think it was a grave mistake. But they just chase fees. So did they allow all these Chinese companies to maybe not be as cautious in their accounting standards and procedures? Yeah, probably. Did the Chinese companies at first adhere to those practices? I'm sure they did in order to pass muster. Listen, but we have many fraudulent firms in this country. I actually, there was an insurance company that I invested in the late 90s that was doing roll-ups. Ridiculous what went on. And actually, there was a really good article by just recently, maybe it was Chris Whalen. Yeah, it was probably Chris Whalen's group, International Risk Analytics, in which they were talking about when things go bad, you uncover what John Kenneth Galbraith wrote in his book, a wonderful book, by the way, The Great Crash of 1929. and when they talk about bezel, which is embezzlements. When things are good, there's always nefarious things from Madoff to, they're going on and people, okay, money is flowing freely. And this is what Chris Whalen's piece writes about. Well, when things start to go bad, then people start being, as he says, their eye, or as Galbraith says, their eyes are on everything and they get to see what he calls where all the bezel is, all the embezzlement, all the crap going on. So now they're going to tighten the standards. I think they'll be careful because they don't want to chase, they have to be very careful because other firms will then go list to other places anyway. And the argument will be, is that really serving investors? Wouldn't you rather have Alibaba here? Wouldn't you rather have, we go on and on and on. So I just think, yes, they have to be very careful, but throwing them off, again, the rhetoric coming out of the White House has been bombastic to say the least, especially with the comments over Taiwan, which I did warn a few months ago that Hong Kong was not the future. Everybody was making a big deal of it. It was always going to be Taiwan. So here it's going to move its way front and center, but they're just trying to beat that drum, in any which way you can upend the Chinese. That's what they're trying to do, to poke holes. Will they go to the extreme and force them to delist? I doubt it, because Wall Street, you know what? They'll be lobbying for it because, again, the fees are so great. And as I say, Wall Street would sell you a cow on Monday and tell you it's the greatest milk cow that ever lived. They'd collect their fee, and by Friday, they convince you that it would be better off butchering it. You'd make more for the meat as long as they could collect the fee. And that's how I view Wall Street. So it's a long answer to a short question.
All right. So, this morning we were, I sent you that chart that the Dow was gaining on the NASDAQ earlier today. There was a big rotation early, which turned into a giant stop run in Amazon, Apple, everything else. And last night you were discussing, or 2 days ago, you were discussing possible infrastructure coming up and possible copper demand going forward. So we were been back and forth with that in the room, talking about that the last couple of days.
Well, John, I don't even consider that call speculation, because the Democrats are, just pushed through a $3 trillion second phase or third phase stimulus plan. Now it's going to go to the Senate, and everybody's going to beat on it, or they may not even take it up. But the bottom line is they will come out with it's an election year. And this is where they're both, both of them should be held to the fire, because for all the nonsense that they embarked upon and wasted time, there should have really been a comprehensive plan. You didn't have to exact it, again, as David Roosevelt said, well, you'll never get the workers with 3.5% unemployment. But the plan should have been in place, because you should be rolling it out now. Why? Because first of all, construction, and I'm living in Arizona, so I'm seeing plenty of it still going on. As long as you're really doing it, you should have been pushing this out. They're both, it's absolutely reprehensible that they didn't have anything of that nature. And Trump, the builder, by his own, that's what he called himself. I'm the builder. Nothing. They wasted precious treasury and more importantly, time. And now when they should have these programs front and center, then you could justify, these large expenditures. Right now, you're just burning cash. I know. You're providing liquidity in an effort to prevent insolvencies, which you may not be able to prevent anyway. And I'm all for about saving jobs, but you do well when they're productive jobs. And right now, all the programs in the states, the individual states are going to be rolled back because they have no capital. You know, now they're fighting in this bill that they're going to, you know, to give each state some money so they'll be able to absorb the great hit that they're taking. So you're not going to get the infrastructure spending on the individual states. The Congress and the executive branch are absolutely, this is the greatest malfeasance that over the last 3, 4, 5 years, even going back to Obama, and I know that Obama, and I don't blame him because he did have a hard time, especially when the Tea Party was at in its heyday, and all the sequestering. Yeah, that was a different type of sequester, right? That was fiscal sequester, fiscal austerity, which is of course flown out the window. But not to have comprehensive plans for airports, bridges, roads, national parks, keep going. Because as long as you're spending money, it's like my brother called me this morning and said, hey, did you see where Trump is giving $1 billion to AstraZeneca for a vaccine? Because AstraZeneca, and I know we've talked about the Jenner Institute, they're doing some work with the Jenner Institute in the UK. And he said, and this is totally not a partisan thing, he said it's a very smart move because he looks like he's now funding it on an international basis. He's getting something for his money. And I said back to him, in today's world, what's $1 billion? It's insignificant when they're now going to argue over $3 trillion and the Fed is busy doing whatever the Fed is doing. So $1 billion, please, it's not even a rounding error anymore.
Yeah, we had an interesting talk with Michael earlier, but he's not in right now. Was it Darius or Ezra? What did you guys want to talk about vis-a-vis China? If we covered all that, or do you have more questions on it?
I don't have a specific question. I just think that the contention or contentious relationship that's going on, it seems to be broader than a financial thing. It seems like there's a military thing aspect to it. And I almost get the sense that we're provoking them in the way that we provoked Japan in the 40s and 30s by cutting off like rubber supplies to them and other things that we were doing to frustrate them. And I just wonder and speculate if we're doing that to China to try to antagonize them into doing something stupid that we can capitalize on.
It's a very good question. And I actually wrote about that in the blog when I talked about China 3 or 4 blogs ago. I'm sorry, you may not have read it, but yeah, I compare this very I agree with you. The antagonism for China, I wrote very similar to the oil embargo of Japan of 1936, which eventually led to, because they were trying, what were they trying to do? They were trying to contain the Japanese imperial ambitions, right or wrong, and there was a price we paid. And I happen to agree with you. And I wrote to Judd yesterday, I said to a few people, it's my dark humor what I'm going to say to you. It's almost like Pompeo and company have figured out that the best antiseptic against COVID is a thermonuclear war, because that'll kill everything. Then you don't have to worry anyway. So because they are so antagonistic, and it's always been Taiwan. And if they're not smart enough to understand what this is going to unleash, it's a gigantic mistake. You're 100% right. It's just antagonism. How far it goes, we'll see. The Trump team, and I call it the Navarro doctrine. If it's good, if it's bad for China, it's automatically good for the United States, because I think that's how narrow-minded he is. It's a very parochial view, and I think it's not the way to go. I'm a big fan of Graham Allison, who recently came out with the book The Thucydides Trap, and that the world works best when older imperial regimes make way for rising ones. And that's, That's why Graham Allison calls it the city's trap, because Athens was not willing to make room for Sparta. And I happen to agree with him. I think that's be the best policy, because first of all, you don't want an empire. You know, the beauty of America was that it was an empire on the cheap, and it was an imperialistic country on the cheap. They didn't really station we had the Korean, and we had troops in Europe, of course, but that was to contain the Soviet Union, contain the peace. But no, and now it's gotten too expensive. It always gets too expensive. It's just a matter of where is the break point. So relax your imperial ambitions, roll them back and up and make way. Is it an all or none game? I've never believed it. I mean, but if you proceed from that doctrine of a real politic type of world, you might see it that way. But I agree with you. I think this is such unnecessary antagonism, but they must think it sells well to the voters. We'll see. And I'm not sure that that's the case anyway, by the way. But there are changes afoot. There's no question. That's why I'm, let's go back to the Mexican conversation. That's why I'm bullish Mexico, because there's no doubt that if Mexico can get any headway, again, as we talked the last time, on the corruption issue, that Mexico will become the recipient of global movement in supply chains. Because they have a way undervalued currency, in my opinion. They have a good labor force. They have a lot of things going for them, and they certainly have geographic location. Problem is, they have a lot of corruption to overcome, and that's their albatross. Can they do it? You hope that they would seize this moment, but there's a lot of time to this. I hope I answered your question, but I'm in agreement with you. Unnecessary antagonism.
Thank you, Ira.
Yep.
Angela, you have anything you want to talk about?
Hey, I got another topic related to what you just mentioned, Ira.
Okay.
And by the way, Ezra, I do kind of see what you're saying, and I think it is analog to, like Ira was saying, to the U.S. Thwarting Japanese ambitions in the 30s. But I think the U.S. did force Japan into war. They were warlike anyway, but it did definitely. And would the U.S. do that with China? I doubt it. We can be afraid they would, and think they might be stupid, because like Judd thinks Trump is stupid, but but I don't think so.
Okay.
I think they'll figure it out. But anyway, but on the other side of the Atlantic, I've kind of thought it, and I read some articles, and that there's probably going to be an evolution of kind of like a U.S., Canada, UK, Mexico trade manufacturing block. I mean, it's kind of a solution for the UK, and it's a solution for the problem with China.
It's a big solution with China. If not just for the countries you mentioned, but also the Caribbean and Central America. If the U.S. were to move chip manufacturing to low CPI nations in our theater, we would incentivize them to be part of our defense pact and as an economic pact. It would be very useful, actually.
Yeah, seems like a win-win in many ways. What do you think, Ira?
So lay that out for me, Angelo. So you think with to counteract the Chinese? I missed a little.
Okay, the idea here is that the UK, Canada, US, Mexico, Latin America, Central America, can become a trade / manufacturing block of its own. And that it solves the UK's problem of having the handcuffs that it had under the EU. It solves the problem of Latin America's poverty. It solves the U.S. labor force problem with when it wants to replace Chinese labor. Does a lot of stuff. What do you think?
Absolutely. Yeah, absolutely. Absolutely. That's what it was. I'm telling you, I can't really, there's the book and it's from, this again, it's from a lefty and I don't care what your politics are. Yeah, I'm like Deng Xiaoping. I don't care whether the cat is black or white as long as it catches mice. But the book, The Global Class War by Jeffrey Faux, F-A-U-X, I read it and it's really easy to read. It's an easy read. I think he's more a journalist than he is anything, but it really lays out what NAFTA was all about. And he puts a lot of the burden on the Clintons. He's not very favorable because he lays it out and all the lobbying and nonsense that went on that they knew. So everything you're laying out is right. And it goes back to one of the areas I studied really in depth for years, which was, 1962, 63, in the Kennedy years, there was the Alliance for Progress, which was basically a Marshall Plan for Latin America. The problem of it is that the United States, all they did was support corrupt regimes because the critical point was, of course, were you anti-communist? Because that was, it's 1963. I know.
Yeah, there was also I'd say the U.S. business involvements in Latin America were more, exploitative than, mutual benefit production.
Right. No question. And there was a lot of work done on it. One of them was a Norwegian sociologist, Johan Galtung, who talked about that. And he had a great graphic how to look at it. And it's what he called the center of the center, which was, of course, New York and Washington and the power base in America, because America was the center, and the center of the periphery, which was the ruling oligarchies and autocrats in Latin America, and the people around them who were all benefiting from that type of money. And what you did, all the United States did was continually support corrupt regimes, but they didn't care as long as you were anti-communist, because that's the way the world was broken up.
Yeah.
They didn't want another Cuba. So they lived with some terrible, terrible people. And that's what the political scientist Chalmers Johnson always referred to as the blowback. That
And possibly the difference now is like the U.S. is really incented for, El Salvador and Mexico to prosper, not just for the elites and oligarchs to prosper at the expense of communism. I mean, now it's kind of like, laissez-faire trade attitudes. I mean, everybody's a winner, everybody's making money, everybody's happy.
Except the corruption is so endemic.
Yeah.
Yeah. Yeah.
My colleague in the next office, he was a executive of an American company in Mexico and a long time, and he retired and came up here, and he tells me he doesn't believe in Mexico. He just doesn't believe in it.
I know, because you get so frustrated. I got involved actually investing. Hopefully it was going to become a public held corporation, but in a merchant bank after Citibank got in trouble with Banamex, we saw opportunities to finance housing. Couldn't be done. I ran into the same problems in Brazil because I invested in land when I was looking at land in 2004, 2005, in growing beans and cotton, thinking, with the ethanol plant, it was, what? The corruption was so great. Yeah, I made money, but what should have been a home run, at best is hit by a pitch. So you might get to first base, but it's with a lot of pain. So that's exactly what it's like. It's getting hit with a pitch. Do I want to get hit? Yeah, I get hit, and you get to first base, but it's a grind. It's never easy. It's just not, because all these years, and it's, what? It lays at the feet of the United States, because when you were busy supporting these corrupt regimes, they don't just go away. There's no magic wand that gets waved and say, okay, the Berlin Wall fell. Okay, all you corrupt, goodbye. We don't need you anymore. No, there's no cleanup. There's no cleanup, and they're all situated with it. Mexico is far beyond that because I think they were always more independent. And it is interesting because there's a lot of studies during the Great Depression. There was a guy, Andre Gunder Frank, German sociologist, economist, who did a study and said that actually when the global system turned down in turmoil, the what they called then the less developed country or third world countries did better because there was less involvement from the United States and from Britain because they had too much on their own plate. So there was actually far more economic development in those places. Some of it's been disproved or challenged, as you should challenge it. But I think that there was a lot to it because they were less involved, and these countries were, doing far better on their own. Because again, it goes on in China. It certainly goes on in Russia. There's a lot of corruption from the moneyed and property classes in these countries. When money comes in, you have to go through them. It's kind of like living in the city of Chicago. There are certain power brokers that sit and you have to pay them, and you have to go through them, and you have to give them a slice of the business. But China was the same way in the way that foreign capital came in, and you had to have Chinese partners and the Chinese Communist Party. So again, it's a lot to overcome. Can it be overcome? Yes. And I think it behooves Mexico. Millions of jobs would be created in Mexico. And I mean millions. So again, but you have to get beyond the corruption. And I don't say that it's easy. I don't say that it's easy because empowered corruption is a very powerful force, and they're very difficult to displace.
All right, guys.
Hey, so let's talk. So the currency move has been kind of a little interesting. Of course, euro failed right at the 200-day again. Got right up there today. I think
Yeah.
110.06 on the spot.
It went to 09.
Yeah, failed. But interestingly, the currency failed. Now, let's see.
And we were talking about that too, because I got stopped out of the beans. I bought them with absolutely no risk and didn't take them off at the 50 at the gap, and I just left a break-even stop in. I got stopped out today when the dollar went bid again.
Yeah, but this time, and it's a hard read because today, I think Switzerland, Germany, and France, the banks are closed today. But this time, the European sovereign, the bonds, the OATs, the Bunds, and the Italians are actually holding up here, going out on their highs. Now, it may just be because the banks aren't around, and maybe the ECB is sniffing around. The Swiss banks are closed today too. So this will be interesting because on days where the euro starts to sell off, the bonds, especially Spain, Italy, and France seem to be weakened against the German, but it's not happening today. So it's worth paying attention to. Yeah,
the oats are right at oscillator resistance on my work.
Yeah, hold on.
Which is funky. I don't know if you. And if you want that indicator on your stuff, just call up Stan and get it. So you're not looking at it down here.
Yeah.
You can actually see the crosses when it does it.
Right. So, I mean, it is interesting. And it's been really a good week with the currencies for me. It's because let's see what the Canada can do, because you are getting some movement. That Bloomberg Commodity Index actually put in a nice week so far.
Yeah, and now it's just rolled over today. So
yeah, I went for my run and I put it in order to buy a nice sized gold position because I'm totally out back at 17, 14, 80 because I had some support down there. I guess my small order stopped the market because I saw when I got back, I saw the low was 15.30. I go, oh, you really? You made a $40 drop and you couldn't go another 50 cents. Oh, these markets, it's fun. But and I will say this, I don't know if you guys know, but in the minutes yesterday of the FOMC minutes, let's see something. Hold on. Oh, I just want to shrink this. Hold on a second. There was a statement. I know it's in there. There was a piece in those minutes. Oh, yeah. Hold on one second. Why am I want to shrink this. Sorry. Come on. Okay. Okay. Hold on one second. Okay, so in those minutes, hold on. There was a statement. I have to go find it now. Shit. Oh, okay, I found it. Let's see. Oh, here's right from the minutes, okay? This is yesterday. In addition, a stronger dollar and lower oil prices were factors likely to put downward pressure on inflation, and market-based measures of inflation compensation remain very low. Okay, so that was, you can hear me, right?
Yeah.
Okay, so that's been my argument about why a lower dollar is necessitated. And actually, when we release the FRA podcast that I did with Louis Gavet, which was actually really good. I know, I appreciate it. But this is a very important element. And I know everybody wants to talk about deflation. My point is, if you get to deflation, the central banks have failed miserably. If the central banks have failed miserably with an add of, I don't know, 10, 11, 12, 13 trillion in liquidity combined with fiscal stimulus, you're in a big heap of trouble. So I'm not arguing that we could get, that deflation will come. I'm just saying that the central banks will do everything that they possibly can, because the onset of deflation would represent a failure of enormous proportions, and we should all be very scared. That's my only point. And the Fed basically admits to that with a stronger dollar. A stronger dollar does not help here. That's why I said that Trump was just, I don't know. I happen to agree with Anthony. Trump may be buffoonish and boorish, but he's not stupid. And why he started talking about the strong dollar, some people ventured because the United States would have to finance all this debt. I take umbrage with that, because in a world where there's so many negative interest rates and the euro can't get its stuff together, and Japan and China certainly isn't able to provide a global reserve currency, you don't have to talk the dollar up. The markets do, which is what it's showing you. And the Fed's trying to, they won't openly say it because they're not, as Powell and everybody before him will say, the dollar is not our responsibility, it's the responsibility of the Treasury. It's amazing that Mnuchin has gone quiet, and Mr. King Dollar, Larry Kudlow, who couldn't, if I would have to be in AA if I took a drink every time over the last 10 years he's said those before he made it to the White House. Um, they're very silent about this, but a strong dollar flies in the face and makes the Fed's role or makes the Fed's policy very difficult to succeed unless, as I said, is that Trump wants to keep pushing on it because he wants negative rates for some reason, even though it's a policy, as Peter Bookfire and others, but certainly Peter Bookfire has been all over. It's a miserable failure. And look at the banks, okay? Look at the bank stocks. Really? You think that they think that there's something good coming here? I don't think so. Let's remember that going back to January, I think JP Morgan was $140. I think Goldman was what, 230, 240? Wells Fargo, they're nowhere near their highs. They're not even close. They're not even partaking in this rally. So as Louis Gavay talks about, he says, hey, the banks are the heartbeat of the capitalist system because they should reflect if the blood is really flowing. You know, right now, somebody better tell the banks that the equity markets are predicting something really good, because they certainly have not gotten the message.
Yeah, we'll take a look at Wells Fargo on the monthly. It was just the
Hold on, I got to pull up my charts.
All right. I mean, they only poked up one day. Really, last week when we put in that bottom, it turned green.
So how much are they down for the year? Oh,
My gosh.
50%?
Yeah. 50% and still, and they still can't get going.
And that's Warren's favorite bank. Oh, let's see. What's Bank of America?
Oh yeah, that was at 35 down to what, 718?
Yeah, it's down. They're all down. And tell me where the rally is. Look at JP Morgan on December 31st, 139.40. It's down $50. It's down $50. So for all the people who are telling me this, that, and the other, and I know the banks are going to get hit here, but we also have the Fed and the regulators telling us what great shape the banks went into this in. You know what? 2 + 2 = 5, and here's the reason for it, just in case where is it? You want to? Oh, and you may as well bring up the European banks. Wow, that's a wonderful, wonderful picture. The Japanese banks, you know what? They should put them on a ventilator because they've been dead. And I know, because I own them. I haven't lost any money. I've made money on dividends because I bought them down here. They've done nothing, and they have monopoly situations. Bank of Tokyo Mitsubishi, it's basically a monopoly. But if nothing is going on, you're not going to accomplish anything. And the financials, again, are missing in action here. They're not accepting this. So this is all, it's a rally based on the liquidity pumped in the system. Because tell me, really, you want to buy a 10-year U.S. Treasury for what? 70 basis points? Where are we at today? Yeah, 70 basis points for the most part. Really? I don't think so. And yet, where I think the curves right now would mimic what happened in QE1 when the curves really, I don't know if you could put that up, Judd. I can't.
Well, I can put up some of the spreads. Hang on.
Go back to, when you did the first QE, the curve steepened dramatically, as they should have. This time they'll be doing it. But I'm telling you, I have not traded a treasury, and I love to trade the yield curves. I've not made a yield curve trade since that Sunday night that I got out when Lael Brainerd, probably about 6-7 weeks ago already, over the weekend was out discussing YCC yield curve control. I said, I'm not going to fight this. I've gotten a nice move out of here. I'm done. And we really have done nothing. But I'd be putting on steepeners, but now I fear the Fed because they can come in and crush me at any time. And when I say crush me, the 210, which is at 52 basis points, 50 basis points, can go down to 30, 32 in a minute. So I'd be as dumb as those short vol people, because I'm picking up nickels and dimes, and all I can stand is to get crushed in one fall swoop when the Fed says, oh yeah, we're going to do yield curve control because we're going to keep rates down, and that's the way we're going to do it. I'm not playing. I'm not playing. And they talked about how the debt can be financed with the new 20-year bond that they brought to market, because it was yielding about 1.22, so they had a lot of buyers. I'm going to tell you what, if you buy the deflation scenario, if you think that deflation is really going to take hold, and there's some very smart people who do, then okay. But we're not Japan. The yen was not the world's reserve currency. The Japanese did not go into that, meaning Japanese consumers and citizens for the most part. Yes, there were a lot of banks and financial institutions levered up, but Japanese people did not go into this in deep debt. When they went into, when their stock market absolutely got destroyed, which is still 50% below where it was, they had deflation, real deflation. So you could buy Japanese bonds, 10-year notes for 50 basis points, but with real prices going down 2%, 1.5%, you were getting a real yield on your money. You're not getting a real return on your money. Yes, if the US goes into deflation, you will, but I'm not there. I'm not there, because they've already shown you what they'll do to throw everything they can to prevent it, because that's what their goal is right now. And when do you think they're going to get off this? The other discussion in the FOMC minutes, of course, was forward guidance. And I'm not going to explain it here. It's easy. Go to Google, forward guidance. The academic research was prompted by a guy, Michael Woodford, back in 2002, 2003. And it became the mainstay of the Bernanke Fed forward guidance. I'm going to tell you what, rest assured, I said it Friday and I'll say it today. Rest assured that until you get to at least 5% unemployment, 4.5%, because we've already been to 3.5% and they still didn't hit their inflation bogey. If you think you're going to be at 9, 10, 11% unemployment, and even if inflation went to 6%, the Fed's not moving. So you want to own bonds? Be my guest. Be my guest. The only reason you want to own bonds is because the Fed is buying. But is it a good investment? No, that's 70 basis points you can have. I'll stay short-term and flexible and look for other opportunities. But the hell if I'll be buying U.S. Treasury debt for 70 basis points. Yeah, I know who will buy it. The stupid-ass pension funds, because they got to invest somewhere. And again, let's go back to the the commission junkies and monkeys on Wall Street who manage that money. Well, they'll put them in there. Who do you think is going to bear the cost? Go ahead. Go to 6% inflation, which is the Rogoff scenario, by the way.
So,
it's amazing. He doesn't really talk about it.
So basically retirement pension investing is being forced to equity income, you think? Or
Yeah.
IRA?
Yes. I'm sorry. Yes.
So pension managers, retirement fund managers, IRAs, advisors are all going to be forced to equity income.
Well, but
reallocate more towards out of fixed income into equity income.
yeah, but then they're going to have to change their charters because a lot of them can't.
I know.
But but as Chris Whalen keeps wailing about, sorry, Chris, I'm much too fond of you to belittle your name like that. But it's, I guess it's what is a homonym? As he's been wailing about, they still have a 7.5% bogey.
Yeah, I know.
Come on, but yeah, you know what? I
mean, even today, if a pension or an annuity or whatever it is, buys a 10-year treasury bond, you've locked in probably a certain negative real return.
Yeah, so you're going to have to ask yourself at some point, who is, again, all of these policies, it's a matter of who's going to get screwed, right? And we know that savers have gotten screwed for 12 years. And the kindergarten teacher, Yellen, and her eighth grade history teacher, Bernanke, and even Powell have been so fond of telling us, hey, you know what? Stop whining, stop complaining. Your stock portfolio is up, your home prices are up, your kids have jobs. Well, that's not true anymore. Your nephews have, stop crying. We're not here for just one segment. We're here for the entire economy. Jay Powell just said that in April in one of his appearances. You know what? How long do fixed income holders how long do they have to sit there until they realize that they are the proverbial chump in the game? Yeah, I know that bond prices have gone up because the Fed has forced them up. But if you keep holding on to this, then you have to pray for deflation. And if you're praying for deflation, equity market is way overpriced. So something is wrong here, but that'll bring us full circle because Judd, I've been watching that 1631 on that S&P bond. Where are we at today?
Yeah, let me throw it up here. Yeah, and we just keep trading around it. Which is down in here.
1637.5 today. That takes us, we're just sitting at that breakout area from, when was that? November 2018, right? Or October 2018? Yes.
Yep.
17, I'm sorry.
All right.
When we had that quarterly breakout. This is the area. And we've gone through it, I know, but it is a quarterly number. It's a big number. So it's worth keeping our eye on.
Hold on here. I got to put up the right chart. It's a daily. Got to have a daily continuation to see it.
But if you believe in the deflation argument, you can't be buying equities here because in a deflationary environment, firms will have no pricing power whatsoever, and these earnings are way overstated.
There it is right there. So David's asking if the 500 billion euro deal proposition of Macron and Merkel, how much do you think it is just proclamation or reality?
That's a great question, David. Let me backtrack for 1 minute. Overnight, Judd, see if you can put it out. Ambrose Evans Pritchard has a piece actually sticking his finger in the FT's eye because the FT had a piece claiming it was the Europe's Hamiltonian moment, which we've talked about Hamilton in regards to this and that if Lagarde was going to be successful, she would have to be Hamilton. But he calls it more Jeffersonian. Ambrose Pritchard does. It's actually a really good piece. So when you read through it, is it really fiscal harmonization with a true bond, or are they playing games? Ambrose Evans Pritchard says it's more mirrors than it is actuality. So I've looked at it, the bond market and the euro, because look what the euro did, right? I would argue that Monday and Tuesday's rally in the S&Ps which day was the huge rally? Monday? Tuesday? Monday. Was as much predicated on what happened in the euro because the euro rallied big too. So they bought into it. I think it was Tuesday. So they bought into it hook, line, and sinker, and they think that it is, but we're not so sure yet. And we haven't heard the Dutch, the Austrians, the Finns, as Amber. But get the Ambrose Evans Pritchard piece. If you don't have it, hold on. Let me
Okay.
out
Yeah,
right now.
and until you get over this 200 day in the euro. You got to get one or two closes above that 110.15 level to believe it.
Yeah, I mean, you got work to do here, but for a week it was doing pretty good.
Well, it had a big rally. I mean, went from 108 to 110. Is a pretty decent, two-figure move in there.
Yeah, hold on. Oh, here it is. Europe's Jefferson moment is a defeat for the Federalist dream. I'll send it. You can do whatever you want with it. But it's a very good question, David. And we don't know. We don't know. There's a lot to be done here. We still haven't heard. We'll have to hear from the court, right? Because the German court is not going to be denied here. They're going to have their say one way or another. And that's why I say, if I'm Lagarde, I'm pushing now as hard and fast as I possibly can. Build that balance sheet, because it's that balance sheet that I've argued for several years, that would be, that once it got so big, it would have to be rolled into a Euro bond, which, because it's been supposedly built on the previous capital key, which now Lagarde has tossed away and says I can't adhere to it because the present situation makes it untenable. But that's about as close as you would get. And so that's creating a Euro bond through the back door. Interesting that back door language is now making its way much more into the speaking process. So we don't know. We don't know. There's a lot of hope, but don't forget a lot of that hope. And I borrow from Ben Hunt because he's so good on it, on the narratives, comes out of Europhile narratives who want to just think, who have so much literally invested, and they do, and benefit from the EU in its present situation, and cannot tolerate, as you saw the pushback on Brexit, any disruption to it. But the German High Court can be a major disruption. We don't know where it goes from here, but I don't accept the popular narrative either, which is why I bring you Ambrose Evans Pritchard, because he gives you a different take on it. And I think it's an important take, and he's a credible source. Not all alternative takes are credible, because a lot of people, have their own BS narrative. But Ambrose Evans Pritchard, I think, is a very balanced person, and he's been pro-Europe when it's been right to be pro, but he's critical when it's right to be critical. He was critical of the Brexiteers in certain ways, but he was, so to me, he has credibility. So that's why I cite him, but we don't know. And 500 billion, as Lagarde says, probably not enough. We'll probably have to go 3 times that. And Merkel did this kicking and screaming, and I still don't know what she did. So we're going to figure it out. And again, I need to hear from 2 people we haven't heard from in quite a while. Well, Merkel on this issue, outside of just allowing the announcement in place, but I need to hear from the president of the Bundestag, Wolfgang Schäuble, because he is a hard money person. And we'll hear from Otmar Issing too. So some of the more staunch hard money German voices I want to hear from before I can really take this much farther. I hope that answers your question.
Yeah, and then he was looking at he didn't think the Italians had a, 3 almost 400-point rally.
Oh, yeah.
So, I mean, that was almost 4,000 a contract. That's a pretty good move for those things.
Yeah, you know what? That's right. And we moved from almost 250 basis points differential down to, 209 yesterday. And I have to say, I off of that, I caught, as I told you, I was butterflied up. I was short the French, long the Italian, and long the German. And that butterfly actually worked pretty well for the week. So I'm actually playing with it right now, but I'm pissed because I missed the 12 o'clock. The oats and Italians close at 12 Chicago time and don't reopen until 1 in the morning, where the Bund stays open until 3 o'clock Chicago time, and it reopens at about 7:20 Chicago time. So I got my Bund leg right. I just don't have, I missed the other side, but that's all right. It's a holiday and I'm better off kind of letting the market do what it wants to do. But it did. We got a sizable move. So again, the market chased for some extra yield because it felt more comfortable that the euro would be sustained. And that was the euro rally, by the way, because that's why I find a relationship between the Italian and the euro holds, because as long as they believe in enough that the euro holds, they buy the Italian, the euro itself goes up because you have international investors. Hey, I'm buying Italian debt that yields 250 basis points more than the German, 200 basis points more than the French. So, and if the euro is going to be salvaged through all this, then it's all one. I'm going to buy the extra yield. That's what you see the world do. Does everybody understand that? Because I think that's critical.
What's everybody say? There's no response.
Okay, that means that they do. They're comfortable. Because that makes perfect sense. Look at it in the United States. People chase 5-year yield over, 2-year for what? 20 basis points? They chase, so they extend duration. So why should you chase Italian? You build a basket. So, I put 10%, 20% Italian, 10% German, 20% German, 10% Dutch. Yeah, you know what? I got some negative, but I got some positive. It's a nice basket. And now I'm getting more than I would if I bought a 10-year US Treasury, right? And if the currency goes up, I can hedge it anyway. If not, I'll just take it off. And if the currency really starts to go up to that 125 level that Judd and Ira are looking for, then it's a really nice play.
Yeah, let's see. Yeah, because then you're looking at that. I'm getting a moon notification.
What's that?
I don't know, something on my phone.
Oh, because it's a new moon.
Yeah. Yeah, so you're basically the 50 quarter moving average up there. And it's got big stuff at 115, and you can see that we just don't stay under that 108.79 level very long anytime we're underneath that.
Okay, and that's why when I post, I'll post it. I hope tonight on the blog, and I know you posted it, Judd. You'll hear Louis Gavet talk about, and that's why we were so simpatico, because he talked about the significance of the dollar and getting this right. Dollars and interest rates are the key to global macro. But he's very bullish copper, as I have been, stating my reasons as to why, and he's really in the same camp, and he was happy to hear me make the arguments too. Not that I don't have any influence. You guys aren't big enough traders. Now, if we can get Stan and Paul and Bruce in here, then we'll have something. Then we'll have firepower.
Yeah, I mean the quarterly looks like it's trying to hold in the copper, and
yeah, oh yeah, and again, if you truly believe that the answer is going to be the infrastructure projects, I think copper is mandatory. Just like you're starting to see steel prices head up. Why are steel prices heading up? It's certainly not because of car sales. I got news for you.
Yeah, I own XME. I were kind of on this theme.
Yeah, and it should be. And somebody, Mike Temple, who writes in on the blog all the time, is a very smart guy, talked about, I guess there's a U.S. steel bond offering. It's almost like at 12%. But
wow.
Hold on, let me see if I can find that.
Possible to sell if it goes wrong.
Yeah, you're right. Strangely, here it is. It's from Seeking Alpha. There's a 12% senior secured Make American Great. It means bringing so there are some bonds out there that, here, I just got a response. Let's see if you
I've never made money in that stock.
Yeah, and in Cleveland Cliffs, I guess is involved in this too. But iron ore prices have been going higher, and I think a lot of it is anticipation. You should, if you're going to spend all this money, look we are now at the market, and I hate to be so flip, and if people have problems with my risque humor sometimes. We're spending so much money, meaning Congress is approved and the White House certainly is not stopping it, and the Fed is certainly making their best. You know, it's like the old saw about the guy who walks into a bar and he's talking to this beautiful woman, and he says to her, "Would you sleep with me for $10,000?" And she says, "Really? Would you pay me in cash?" He says, "Yeah, absolutely." She says, "Sure." And then he says, "Well, how about for 100?" She says, "Well, what do you think I am?" He says, "Well, we've already ascertained that. Now it's a matter of price." So that's the world in which we live in. There's no amount of money that you won't spend now. Hell, the Trump deficit at $1 trillion, which I kept railing about, going, if the economy is growing at 2.8%, we ought not to be running deficits of $1 trillion, which we were doing before COVID. So we didn't go into this in a true Keynesian situation, because Keynes would have said you should have been saving money and then putting together infrastructure plans to be ready to spend when it came necessary, like now. No, we're already running up deficits, significant deficits in the good times. Now there's no number big enough. There's no number. Who cares? Who cares? Now the Fed's just added, what, $2.5 trillion to their balance sheet?
And it's not enough, and it's not enough in the right places.
Yeah, and they just added how much to the deficit? No, come on. But what number is you've just proven? And I don't care if Mnuchin says, "Oh, we'll slow down." You're not slowing down. It's an election year. Now it's just a matter of posturing. Now either $100 or $10,000. We know what you are. So,
Cleveland looks good,
Yeah.
Ira, and so does Deere and some of those, and Caterpillar, all these names, and
Yeah.
the Dow's been outperforming the NASDAQ all day.
yeah, and you know what? And as we talked about, but I went back and looked. So in certain parts of the world, agriculture is doing good. Again, Brazilian soybeans based in reals are at all-time highs. Can you put up that chart, Chuck? Can you do that chart?
What's this?
Do you get the real futures on CQG? Because I'll give you the symbol.
Yeah, give it to me.
Okay, so take soybeans and divide it by, it's BR6M0. We'll get you the real in US prices.
Well, something's not found.
No, not V.
You know what? I
Not,
put in,
not V, B.
hold on. I put in the.
You put in V. I see
Yeah,
it.
no, I put in. I didn't put in the right symbol for the beans. First of all.
Oh, you didn't. You're right.
No, and then it's BR.
BR6MO. You should be able to get that because you get the currencies. No, let's see.
What am I not putting in there? Here.
BR6MO. That should work. All right, then let's do it like this. You ready?
Yeah.
All right, put in the beans times do the star IUSD BRL. See if that works.
Oh, if I could actually see where my star thing is, oh, there it is.
It's on 8. See if that works.
Yeah,
There
there you
we
go.
go. Okay. Now put up a monthly chart.
All right, let me,
I wonder if it'll look the same because I was using the futures real. It should, but
there you go.
all-time highs, baby. So if I'm a Brazilian farmer, fence post to fence post, because I'm making nothing but money. So when you want to see the impact of the dollar, we talked about it on Friday. Here it is in its full glory. Yeah, Donald, keep talking up the dollar because you're really helping the American farmer.
Wow. Well, let's just take
All
this
time
thing out all
highs.
the way and see. Okay, so this chart goes back to 94. Wow.
Next thing we know, Robert's going to be moving down to Rio.
Yeah. Yeah, they put him back to work.
Yeah, well, they should.
They have. No, they put him back to work. He and Todd have been,
Our combine sales in Brazil are higher, actually 12%, and I'm not surprised, Ira.
Yeah. No, I am not surprised, Robert. You know what? And they're lucky to have you in this room because you can speak to real things. Again, the Brazilian farmers, and they shipped Robert, what, you have the export numbers from Brazil in April? I mean, they were gigantic.
Oh, no, sir. No, I do not. I'm
Yeah.
just very busy trying to make sure that we have as many parts, Brazilian-made parts in our combines, because by the same token, everything is 20, 30% more expensive if you buy for example, a hydraulic pump, Bosch hydraulic pump from Germany. You cannot. You have to try to find equivalent in Brazil. Otherwise, you will not make money as OEM. Farmers will.
Right. You know what? That's right. And who else is building down there?
Who else is building? Oh, it's everyone. John Deere, Case New Holland. I mean, this is all pretty much global team. Everyone wants the piece of a pie.
Yeah, and it's like, see, when you look at that chart, and Robert, you can speak to this far better than I can, but the Chinese are buying those beans and they're processing them. This is like the Russians in 72 and 73 when they did the Russian wheat deal. They bought so much U.S. wheat at such at such low prices that they were able to distribute it all over the place. This is the Chinese are buying this because the yuan, it really hasn't moved much.
They're so shrewd. It's sometimes difficult to see at first what they're trying to do, but I wouldn't be surprised if this is a very exact strategy for them. All they see is the price now, and they're happy.
Yeah, they'll become exporters of soybean meal to feed, other places because they can make enough money on the currency differential. This is it in its full glory. I know we can't make it onto CNBC with this, but we can discuss it here. So this is truly a significant chart. Just to give you the condition of the global markets, and that's why
this is your company right here, right, Robert? AGCO?
Yes, that is correct.
Well, it's going with Cat and Deere. They're all going.
Yeah, we no longer hurt, and we had a good quarter, and this, just like most of the companies, though, this quarter too will really tell the truth. So far, April was better than we thought, about just because we are cost cutting and being very selective where we spend the money.
Yep, and keep us abreast of this. This is going to be playing out in Mexico because Mexico, even before Brazil, I mean, probably an interesting chart to look at. I have never looked at it. Is the peso versus the real? again,
There it is.
this stuff is so important because it reflects the dynamicism of the global market, by the way, because these are the underlying things going on. And that's why when I take Trump to task for talking about a stronger dollar, that real soybean chart really shows it.
Wow.
I've given you a lot here to chew on. Again, watch the European sovereign, especially tomorrow, because don't forget we have Memorial Day on Monday. It'll be interesting to see how these markets set themselves up. But I will just end with this because the deflation inflation discussion is really what's taking place to me at the better global macro people. And we want to be on top of that. But my viewpoint is to everybody's talking about all deflation. If you're a deflationist and believe deflation is going to take hold, you better be selling the equity. You better be short SPUs. Because if you think that the stock market is going to be able to weather a real deflationary period, think again. There's no pricing power, and the PEs, and I don't care how cheap money is. At some point, no profits will take its toll. You'll get dividend cuts. There won't be any stock buybacks. There'll be a lot of very negative things, and people will be hoarding cash. Anything else? Otherwise, I'm going to go
No,
and
that's
try to
great,
make
Ira. Thanks.
Okay.
Anybody else have anything else they want to talk about? Okay, guys. Everybody says thanks.
Okay, and when you get a chance, listen to the FRA podcast with Louis Gave because it is good. And I've never met Louis in my life. I knew of his father, or his dad's still alive. They did great work. And as I told him at the end that all the Swiss guys who I knew and respected, that was a major read for them. And then when Anatol Koletsky joined them, very powerful group. It was an honor for me to be on and discuss with them. But thanks, because it was really our Friday discussion that laid the groundwork to be able to have the in-depth discussion that Louis and I had. Last Friday's discussion in White Wave was excellent and really got my animal spirits in the thought process going. So, all right, have a great week, have a great Memorial Day, and we'll be in touch.
Okay. Thanks, Ira.
All right.
Bye.